Hey, everybody, what is going on? Thank you so much for tuning into the Queen's Lounge podcast. I am your homegirl, Shay. Thank you so much for tuning in to the Queen's Lounge. Welcome to the lounge. Of course, you already know I have a special guest with me today, Miss Shandalyn Jackson. She is going to be speaking with us today about money management, budgeting, saving, all that good stuff. As you all know, everyone was affected by the pandemic. Everyone was hit with the pandemic, whether they knew. Obviously, we didn't know it was coming, but it kind of put people in a space where they either had to live to survive or they had to move some things around, think differently, do some things they would normally do just to make sure that they got back on track. So Miss Shandalyn is actually Miss Shandy is actually going to give us some tools, some tips, some trades, so that if we find ourselves in a world pandemic again, that we will not suffer financially because of it. So I'm going to allow Miss Shandalyn to introduce herself. Miss Shandy, let the people know who you are.
Hey, everybody. I'm Miss Shandy, also known as the budget coach, investment coach, the mommy that works. I am one, I would say, that literally had to utilize these same tips to get myself in a position of becoming more financially stable and getting onto the road of financial freedom. It is something that I take so much pride and joy in, because I have children. First and foremost, I want to make sure that they are set up to be successful financially, which is something that we can honestly say our community lacks very much of. It's something that once you get 18 years old, you're grown, you figure it out at that point.
Yeah.
But we're wanting to change that system mentally so that they can be prepared sooner, because that's one of the biggest parts of adulthood, right? So we have to switch some things up and have to take some time to discipline ourselves to learn it, because most of us wasn't taught this information either. So how can we teach our children something that we were never taught ourselves?
Right.
So this is a part where we're having to humble ourselves, realize that we have an issue, realize that we're needing to work on something and going forward. And this is kind of something that I've dedicated my life to, because it changes families, and you cannot deny the fact that it changed lives.
Sure.
So that is something that at my heart, at the core of me, I've always wanted to do. And this is just something that was given unto me that I had to apply to myself, and wanted to take the methods and give it to the world.
All right. So let's get into some questions, because I might not be the only one that want to know the answers. So let's get into the first question. What is the right way to set up a budget?
The right way to set up a budget. Honestly, the right way to first, I tell everyone to look at your finances. Like, look at your bank statement. That's the very first step in setting up a budget. And it's as crazy as it sounds, you really don't realize how many people want a budget, but has never looked their bank statement, has never looked at where they spending the most of their money in.
Right.
That's the first step. The very, very first step. You have to see what is being accounted for, not just how much bills you have, how many bills you have that's going to be something continuously paid out every month, like your rent or your car note or your utilities and things like they have. You must first look at and see your spending habits, and that comes at looking at your bank statement and actually paying attention to it on a month-to-month basis.
Right.
It's not a one-night stand, is what I tell people. This is an everlasting relationship. You have to do this. Build. You really can't, like going to the gym. You can't expect to go to work out one time and expect all that weight to drop off because of that one workout. No, this is something you have to do on a continuous basis, consistently, doing it repetitiously. You know, even if you do it in small increments, it don't have to be thousands of dollars at a time. Do it according to what your financial status allow you to. Whether you're a millionaire, a couple of $100,000 in the account, thousands, or just 100. Whether you're getting paid $50 an hour or $7.85 an hour. I pray to God nobody's still getting paid that much. But the reality of it is if you are able to look at your statement, see if you're living beyond your means. That's what looking at your statement is going to help you to realize. Are you living beyond your means right now?
Right.
Take a step back and look and see is this something that is allowing for me, that is causing the hardship? Am I causing the hardship on myself because I'm trying to keep up with the job for this?
Right.
You know, and that's what people have to look at. Can I afford this? You know, and being okay if you can't, because we're working toward progression, right?
That's
so
it.
the first thing is setting that budget is really being realistic with yourself on what you can and can't afford. You can keep those red bottoms. Go to famous footwear somewhere and get some to it. You don't have to have the Louis right now because your bank account can't afford that.
Okay,
Some people don't like being told that, but the reality of it, I'm just saying this. I mean, tell me I can't get my nails and toes done every other week, polish them things myself. I'll be mad at you.
Okay.
You know, but it depends on how far are you in a deficit. You know what I mean? And that's why I tell people all the time. If you know for a fact that your expenses on getting hair done, nails done. I'm saying hair and nail because I'm a woman, so I can only speak towards that. But even if a man, you're gaming on a lot, can you afford that new game? You know, can I go afford to go hang out at the restaurant this weekend with my family, or do I need to cook a dinner at home a couple of more times because we eating out too much?
Right.
These are the things that you want to look at first, and then from that place, look at how much you owe. And look at how much income you bring in. And then once you look at how much money you owe and how much money you bring in, see if there's literally a deficit, because that's your network. Right. Like that's what creates the network. Your expenses versus your income and how much you have left is what you're pretty much worth. So once you look at that, then create a budget from that. How much would it take for me to pay off this amount? And how often do I need to pay on it? And that's where you create your budget at. So if I had $1,000 over here that's due, and I'm getting $200 or $500 every week, I could take that 500, maybe I can save $10, $15 out of it and pay $10 for 10 months, and boom, the $1,000 budget is out. And I tell people to start small as opposed to big, because you want to leave some type of room just in case if life happens, like if your car needed to get some maintenance, because trust and believe, every time you put your mindset, say, hey, I'm about to start saving some money, something is going to pop up.
All the time. All the time.
It happens every time. So be realistic with your budgets. Be realistic with your expenses versus your finances. And more importantly, be willing and ready to relinquish whatever it is that you may feel that you need, but it's really a luxury. If you can do it at home, but you paying to go do it somewhere else, that's a luxury. Yeah, you know what I mean? If you're not, I'm not talking to you, Siri. I'm sorry, but it's a luxury. It's a luxury, and I tell people that all the time. Like, some things you can't do it on your own. And I understand that. I understand that. But some things that you can do, save you some money. Yeah, do it yourself. Learn how to do it. YouTube is a famous place to teach you how to do everything.
Show them.
It teaches you everything. You can't afford your makeup artist, go on YouTube and find out how to paint your face really cute for that event, and save that $150 or $85 or however much you cost for this event. It's sacrifices when it comes to budgeting. So that's it's so much into budgeting itself, but you got to be willing to sacrifice if you're really wanting to get out of financial debt.
That's good. So budgeting has always been hard for me, and it wasn't until I moved out of my parents' home to where I really knew what budgeting was, and it smacked me in the face real hard, because I'm just like you. I like to get my nails done. I like to get my hair done, that type of stuff. But it was necessary for sacrifices to be made, because when I was looking at how much debt I was accumulating and spending the money on things that I liked, what none of that debt getting taken care of, and it was just following me into every year. And I got to the point where I got tired of it. Yeah. And because I got tired of it, I had to put a plan in motion. You know what I mean? I had to only pay what I could afford to. Took me a long time to pay it off, but I could only pay what I could pay. You know what I mean? And then I will often get upset with myself, because I'm thinking, as an adult, there's just some things that are bigger priority. And the bigger priority is making sure that you out of debt by the time your children come. You know what I mean? And so I've gotten better. I've definitely gotten better with budgeting and, making sure that I got a little something to fall back on. that type of thing. So, I mean, I'm still going to keep my hair and my nails and I'm going to just have to. I'm sorry.
Listen,
I just got to budget it in there.
Just make up the difference.
Yes.
And that's why I tell people, honestly, it's what you're willing to do. Because if you really need your hair and your nails done, maybe they're add to your income. Yeah. You don't always have to. The first tip don't have to always be you giving up something all the time. But you will have to put in work one way or the other. So if you know every other month or every month you spending $350 on just your maintenance of yourself, from hair, nails, whatever you like getting done, make sure you're adding not just to the income, but you're doubling it. So you need to find a way to double that $350.
That's good.
$700 is your actual goal, because if you want to make sure you're able to cover and replace. You see what I'm saying? Whatever you're taking away, because the goal again is to save and to build on top of that savings so that you can still have cushion to fall back on no matter what. Yeah. What I personally did was I have a 9-to-5 still. And from that 9-to-5, I still went and I started Uber. I started doing Uber deliveries. I started doing shipped orders. I even was working at Burlington for a little bit, literally to pay for different things. It was a moment where I was literally working 3 full-time jobs because I wanted to aggressively save so that I wouldn't have to stop getting my hair and nails and toes stuff done. I had to make up for it on the latter end so that I won't be, because a lot of people have this thought, if I think it, then it's just gonna happen like that. And don't get me wrong, I truly believe in manifestations. I truly believe in speaking those things that be not as though they were. I believe in all of that. But faith without works is dead. So you have to be able to activate some type of some type of action to put towards meeting your goals. It's not just going to happen by you sitting on your tail and it fall into your lap. And a lot of times when we come into this financial industry, that's what people tend to think, because they see these overnight successions and these overnight successors that are looking one moment one way, and then the next moment they're like a millionaire. But you don't really see what they did behind closed doors to get there. They had to sacrifice a lot of sleep because they was working everywhere. They couldn't go out with their friends as much because they needed to go back to school and study and get those letters behind their names so they can be offered a higher salary at a better paying job. It comes with sacrifices either way it goes. And it's either you're going to sacrifice on the front end or on the back end, but you're gonna have to sacrifice something to be ready,
Very true.
Telling everybody that it's not hard, it's not easy, but it's not really that difficult either. It's really mind over matter when it really comes to things. And when you feel like you need something, when you feel like you need something, ask them, like, is this actually a real need, or is this a want? Can I do without it? Because what you don't want to do, you hear a lot of people saying, I'll work, but I have nothing to show for it. Because as quickly as the money coming into your pocket,
it's going out.
It's going right back out. The goal is for you to keep your money circulating within your home, not always sending it out to where it's never coming back. You got to keep it circulating within your home. So that's why I say little things like, if you know you're spending $350, then your goal is not $350, your goal is $700. Double it up, so you can keep something circulating around in your home, and take that portion that you got left with that $350, take $25, put it in an interest bearing account, and let it just stack. Don't touch it. Leave it there, and it will build over time. It's not going to happen overnight. It will build over time, but it's going to take your discipline to do it.
That's good. So along with budgeting, saving kind of goes hand in hand with that. Because when you figure out what income you're bringing in, you're taking a certain percentage out to kind of budget for whatever it is that you need, whether it be, your month-to-month expenses, things that you like to do for yourself personally, you're budgeting for that. So when it comes to saving, I hear a lot of people say that you should save anywhere between 6 months to a year of what you make to be considered good or okay. What you got to say to that? Is that not enough? Is that
some people say a year? If you honestly, my personal opinion is if you are not saving enough for at least 5 years, you're in trouble.
Wow.
And I say this because what if the price of inflation goes up and down every year?
It does.
If you only saved according to the year that you're currently in, then baby, you already starting out in a deficit.
That's good.
Even in an apartment, your rent is going to go up an extra $50, $60 every lease renewal.
Mine did.
Do you hear me? So if you have to keep up with the price of inflation, so if you're only budgeting for 1 or 2 years, then yeah, you setting yourself up there. That 1 or 2 years is going to be more like 6 months. If you're not, I put it like this: if you quit your job today, how long would you last? If you quit your job today or lost your job today, how long would you last? According to how you currently are spending, according to how your current spending habits, how long would you last if you stopped? If your main source of income just came to a complete halt.
I'm not doing as good as I thought.
It really makes you think and say, you know what? Maybe I should go ahead and make some adjustments, because what I thought I was doing right is, and God forbid if you have a family, because now it's not just you, it's you plus your children. So that money is going to go by way faster than what you expected, because you have to consider inflation.
That's good.
Yeah,
good stuff.
The property taxes on your vehicle and things are going to vary from year to year, of course, because of inflation. The value of your car is going to pretty much decline the moment you drive it off the lot.
Yep, that's pretty much how that goes.
Taxes ain't going nowhere. Still going to go up and down every single year. So you have to think of it like this: do you want to be working with liabilities for the rest of your life, or assets?
That's good.
And your assets are those things that's going to add to you. Your liabilities is what's taking away from you. So if you have more assets than you do liability, you're already on a great start, because you got something to cover you when unforeseen circumstances that are out of beyond your control arise. It's not going to hurt you as bad. It just really it puts yourself in a more secure spot when you can say, yeah, I lost my job for an entire year, and instead of me stressing out, I was able to go on vacation and kick it and still come back home and maintain for the rest of my literally. That's what happened with me and my kids during the pandemic.
Awesome. That's awesome.
I was furloughed from my job for almost an entire year.
Wow.
And me and my kids was able to take a vacation. I was able to pay my my lease for an entire year and a half.
That's awesome.
With the savings that I had from my everyday paycheck. And I only had one source of income, and I wasn't making over $20 an hour either.
That's awesome.
So I said it to say it's possible. You just have to live under your means, or sometimes, or make up for the difference. Either live under your means or make up for the difference until you meet your goal that you're trying to set.
That's
and even if you do meet your goal, I tell people to then create another budget. Because 10 times out of 10, once you have met your goal, you're going to have something else that you want to go acquire, which is going to be a whole nother set of finances. So or a whole nother set of a whole nother game plan. A company comes together quarterly for a reason.
Right. Sure does.
They revisit it.
They sure do.
For a reason. Yeah. So you have to apply those same methods to your home and your household. Work the plan, set it. You see if it's working, great. Set a next budget immediately. Don't delay on it, because the moment you get comfortable, you then start taking from your goal amount, and now you're back to square one, as opposed to building on top of it. You see people do that every year with taxes.
Right.
Every year with their income tax, they come in, oh, I'm going to get this, I'm going to get that, I'm going to get this. Awesome, great. Get yourself a car. Now what you about to do with your paycheck? Some people quit their job. Some people do all the
kind of stuff on tax season.
What are you doing this for? You don't want to get stuff that you don't want to get something because you can get it in the moment. You want to be able to get it because you can maintain it. You can't afford it if you can only afford it within that moment. If you can't keep up with the maintenance, if you can't keep up with the car insurance, if you can't, then baby, you can't afford that car. Go get you a cash car, and the money that you was going to be paying a monthly payment on every month, go put it in a reliable, trusted shop, get it fixed, tip-top shape. Now you got a car, 0 car note, and it's running.
That's it.
I had a point A to point B car for 6 years. Wow. No exaggeration. I just bought me a brand new car. Just bought me one. And everybody looking at me like, girl, how you giving financial tips and you riding around? Don't worry about it.
That's the reason why.
Said something different though.
Exactly.
I don't care to impress people. And honestly, that's what people have to get past. I think that has, not so much as I think, I know that is what majority people struggle with. Because a lot of times we get these luxuries because we want to look apart more than being the thing that we're wanting to acquire, being the part, you know what I mean? Like we rather look good and then actually being good. Because granted, looking good makes us feel good and all that kind of stuff. But when you are able to say, you know what, I can go back home and my lights still turn back on.
Okay.
You got your hair done, your nails done, you slayed, but you going back home to a dark house. Like, man, boo-boo, come on, this don't make sense.
Where's your priorities, ma'am?
You got to get this together. We have to correct these priorities and get these things in line, or we would never progress to the level that we are desiring to be. We'll be forever dependent on somebody else to be something for us. And I say that because some people who may come from financially stable homes probably never really struggled financially at all. Because they always had daddy there, or they always had mommy there, or the man that they married take care of the breadwinner of the family, so he's taking care of majority of things, so they really don't have to worry about nothing. It's easy for them to go to the shop or to the mall and blow something and not worry about it because they man got making a lot of money, or vice versa. But what if something happened to where that person is incapable of doing that for you? Then where does that put you financially? If you don't know how to pay your bill, baby, and God forbid your significant other passed, how would you be able to sustain? It's important for everyone to know this information, even if the husband or the wife are doing the financials themselves. Like if the husband is wanting the wife to just do the finances, or the wife is wanting the husband to just do the finances of the household, both should be knowledgeable of the information at any given moment that one goes down.
I agree.
You know, and we see that also happening during the pandemic, where a lot of people struggle because unfortunately we had some people in the hospital and they were the breadwinners, so the family suffered financially. The ship has to be even to sell. It has to be even. So if you're wanting to make sure that your family is continuously building this generational income and sustaining life's woes, everyone should be knowledgeable of that information. It's not good for just one person to know.
Yeah, I agree with that for sure. I always hear people say that it's hard for them to save when they don't bring a lot of income in. But I'm gonna have to be honest, I disagree with that. Because I feel like we will spend money that we don't have on everything else. If it's something we want to do, if it's somewhere we want to go, if it's something we want to buy, we'll find the money. But the importance of saving is that it's almost kind of like having something to lean on, or kind of having like a fallback plan, you know, almost, so to speak. When I was living at home, I wasn't thinking about saving. I was cool. I only paid maybe 1 or 2 bills. I had a car note. I had a cell phone. I didn't have as many bills as I got now because I was living at home. But when I moved on my own, it wasn't until something happened where I felt the need to have to save more. It was either my car needed fixing, or something went on with the apartment and I had to pay because the apartment didn't do it, or something of that sort, or something personal that needed to be handled. And it was when I was in those positions where I didn't have it, or I had to wait till I got it, which was my next check. But I can't wait till my next check because I got to pay such and such and such with the next check. Or I can't call mom's, pops, and, you know, bro, because they got their own house they got to take care of. So it wasn't until I got to the point in my life where things happen, life happens, and it happens to everybody, no matter the amount of money that you have. And it's really up to you whether or not you're going to have a plan. So when it does happen, you set, you good. It feels so good. Exactly. I needed brand new tires on my car. And I'm so glad. Listen, I'm so glad. And I thank God for growth, because had this been, 10, 15 years ago, I would have just been riding around with the same old ball tires. But I needed tires on my car. And the guy was like, there's no way for us to salvage these. You're going to have to get brand new tires all the way around. And then, all right, can you do 2 and 2? Can I do 2 this style, 2 next style? I mean, which one's more important? And he was like, I mean, with you having an SUV, you kind of have to get all 4 tires. I was like, oh, Lord Jesus. Yeah. $730 for some tires. Yeah. But it was a blessing to have the money, because I wouldn't have had the money 15 years ago. But the fact that I had the money, and I was just like, you know what? It hurt to give it up, but I got it. And it felt so good. But
you know why it hurt? You know why it hurt?
It was all
hurt because we didn't plan for it.
Listen, that hurt my heart.
Like, you have no idea. A lot of our stressed out moments will be resolved if we just plan for
it. That's it.
Because if when you budget, I have a financial spreadsheet. I did this budgeting course with this lady on Facebook. I found her on Facebook, and she was doing budgets for those who are ready to become home buyers and stuff, getting them prepared for home ownership, because you can't own a home and you don't have a budget. You can, but you will be closer to being one of those ones that's dealing with the foreclosure, because with home ownership comes with way more responsibility. You can't call a maintenance man over and make it the responsibility of the apartment complex to fix the plumbing. No, you got to plow the plumbing yourself.
That's it.
You got to do the roofing yourself. You got to clean them gutters yourself. And if you are not willing to do it yourself, or have somebody that can do it for you, you got to go pay one of these licensed contractors to do it.
Okay, and you better hope they do it right.
Big money. Okay. And you better hope they do it right.
No, for real. You better hope they do it right.
Seriously. They won't be coming out of so much money.
Okay.
So she mentioned a lot of people are so ready to just jump into buying homes and jump into things.
That was me.
Because we really don't realize we don't understand the financial responsibility that truly comes with it.
Yes.
And it's because a lot of society has said, you're not this unless you have that. Or you're not that unless you have this. And we have allowed that to plague our minds so much so to where we believe that we have to have this to have status, when the fact of the matter is, we don't need none of it.
That's it.
You don't need anything anybody else got. What's for you is for you.
So
whatever you have in your hands at any given moment, every tool, necessity that you are required to go from one step to another, you're already in possession thereof. Mm-hmm. You're really only holding yourself back because of the mental cage you put in yourself. You're putting yourself in. Mm-hmm. And this comes first with breaking free of mental requirements and breaking free mentally of every stigma, every thing that society really just try to place on you to give yourself status. You got to know who you are first.
That's it.
And know that even if I may have this, and even if this is how much I got in my bank account, then hey, I'm good. Until I get to that next phase, because I know I'm building somewhere. I'm just passing through this point. This is not my final destination. And a lot of times we make movements as if this is our final destination financially, and we do ourselves a disservice, because again, we're living beyond ourselves and not focusing and prioritizing ourselves financially to the things that we really should be more so focused on.
Right.
So like I said, we can relieve ourselves of a lot of stress if we set $5 to the side. It doesn't have to be a lot of money. I remember when I was younger, my grandfather had one of those big old water jugs. Remember those water fountains that they had these jugs to go to, and you just flip the jug, the purified water over the jug, and you can go up there and press it. Yeah. Well, he used to take every penny. He used to take all coins, all change, no matter what. He said, if you don't remember anything I ever taught you, remember this. The least of these things it would be the thing that you need the most. When you pay attention to the least of things and you hold on to it and you build it over time, it will make the biggest difference. You don't have to despise your small beginnings. Never despise your small beginnings. Meaning, if you start and you can only afford to save $2 once a month, every 2 weeks, because that's what your financial status can afford, then that's more so something that I do for my kids, because they get allowance. So if you getting $2 every week or month or whatever, according to the chores that you're getting, baby, you saving every single month. By the end of the year, you got that $24. You know what I mean? Or you got 50 out of 52 weeks, you didn't rack up $104. You see what I'm saying? And they're like, oh my, I got this much money. Exactly. You didn't collected every penny. You didn't collected every dime. You didn't collected every quarter. And we go and we literally put them in those little rolling nickels, rolling quarters, and rolling dime things, so they can see how much money they have at the end. And you have no idea how much excitement that brings to children, and how wonderful it is, because it helps them with their literacy as well with math. It helps them in school. You can be teaching them these things at home that's going to really help you as an adult. But so if you teach them while they're young, they'll be well off by the time they get ready to go out of college. They will. Going to college, into high school, and things of that nature. So it starts small. You don't have to always go big. Know your budgets, know your limits. I was with my trainer this morning. He said earlier, a lot of your workout, if you start off with smaller weights but higher repetition, it's still going to build the same muscle, even if you did bigger weights and less repetition. So if you did 10 push-ups 3 times, that's still the same thing as 30 push-ups 1 time. You know what I mean? It's all according to what you are able to handle in increments, your own level, and that's going to come through your budgeting. How often do you get paid? The same person that gets paid bi-weekly or weekly wouldn't have the same budget as someone who gets paid annually, because the frequency of their income is different.
It's different, right?
So you're going to be able to save in different increments. Your expenses may be different. It's not a one size fits all. You could take the methods, but the numbers will be according to your income. So if you got to start off with $5 every month, start off with just saving $5 a month. After you successfully done that for 6 months, increase it to 10. And I say smaller months, because sometimes we set these big long goals for ourselves and we get sidetracked and get knocked off because we get so tired of doing the same thing, or we forget to do it. So challenge yourself on a month-to-month basis on how much money you want to save by the end of that month. And then go to 3 months, and then go to 6 months, and then go to 12 months. And that's how you can build over time consistently, to be sure that you're checking in those checkpoints every single time. And then go back. If I got off, okay, how much do I need to get to this budget? Because I said by December, I should have at least $450 in this account. I only got 100, so I need to make up that $350, and how I'm about to aggressively do that so I can get myself back on track.
That's it.
It's okay to revise. Consistency is what wins. Endurance is what wins. It don't matter how quickly you get there, just get there.
That's it. Now, I want your take on this one, because I've heard that most people budget month to month. They find out, they this is what I do as far as like my budgeting month to month. I figure out what bills I pay on a month to month basis. I figure out what my check is going to be for the entire month. And then I budget from there. I find out how much money, I guess total it would be that's going out, depending on what needs to be paid month to month. And then I take what's left, put a certain percentage of that into savings. But then I also hear a lot of people say month to month is good, but then also revise depending on how you get paid or what different streams of income you have. So what's your take on that? Is it better to budget month to month, or is it better to kind of do it month to month, but revise as, your money changes?
I will put it like this. If you're doing more revising than building, then you're not going to meet your goal. I'm going to be totally straight up and blunt. Granted, again, revision should only come in those situations where life happens that is beyond your control. What we tend to sometimes do is give ourselves too much cushion and we don't have a lot of movement, and then we become discouraged. So that's why I say revision only when necessary. The goal is to do it on a month-to-month basis. I get paid from, I have multiple, first thing first, you got to have multiple streams of income.
That's where I'm trying to
figure out a way to get yourself with multiple streams of income to the point to where you don't have to have, and sometimes that may have to be working multiple jobs if need be. It just depends on how aggressive you're trying to meet your goal. If that first job don't pay you enough, that is. But if your first job is paying you enough to maintain your expenses, maintain your household and just your everyday needs, and you're able to build and save and invest, then cool, do that. If you know every week you're spending $30 on Starbucks because you gotta have you a coffee every single day, it is a lot, but a lot of people spend a lot more than $30 because it's a cup of coffee, like about almost $10 for a cup of coffee now. If you get the specialty, it's about Starbucks 10 cups for a cup of coffee.
They tax
so you doing that taxing. That's why I love Panera. Yes, sir. But not needless to say though, on a serious note though. But if after you buy that $7.50 coffee plus those taxes, you coming out to about $10. And what I always do is, well, I round up my expenses and I round down on my income.
Oh, wow.
Because if I round up on my expenses and I round down on my income, I can never be over budget or under budget. I protect myself. So for instance, if you're working a job and you know for a fact you're getting $8.90 a week, after taxes, after not your gross, you want to deal with nothing but your net because that's what you're taking home.
Exactly.
You know, your net is never going to change. It is going to be what it is unless they change the amount of taxes they coming out of your paycheck. Right. Now, look at your net, take your base net and look at it not just from a spot of income and expenses, because all you're doing is getting right back into that cycle of living paycheck to paycheck. You want to take your net, your expenses, subtract the difference, and not just take your remaining and put it into savings, but take your remaining and find something that you can put it into that's going to yield you extra income. Whether it's the stock market, whether it's different small startup business investment strategies where you can take part ownership in it, and when that company starts to see residual, you get that residual back in your pocket.
Oh, wow.
It's okay for you to take $25 out of $100 because you're saving 75 and you're playing with 25, and that 25 is going to bring you back another $100 as opposed to just sitting in one spot and putting all your eggs in one basket. Because there's still no movement. Because the moment you need them tires fixed, all that's gonna be gone.
Okay.
So you want to be sure that you're continuously adding to, and not just from your source of your paycheck, but from a source that is outside of you literally having to put your hands to work to do it, because it'll free up some of your time. And that's what I was getting to earlier. Yeah, you could go work multiple jobs. I took the multiple job route because I wanted to save aggressively. But some people who may not have the time to be able to go work a second job because they have children to feed and things of that nature, I did too, but I still try to make that thing work. Because I knew I needed something. I needed another car. My car was on this last stream. So I'm like, yeah, girl, you got to save this money so you can get this other car, because you know you're going to have to deal with it. So when I begin to pay attention to stuff like that, I have to find some ways that I had to think of ways where I can bring more income in without it taking so much of my time. And those were some of the strategies that I was telling you about. There are people who are renovating homes right now who are looking for people to invest in their property. They're willing to, if you trust them, and if you have a relationship with them, it may be in your best interest to do business with your real estate friends. Bring them, hey, you gave me a referral. I'm gonna knock you down a couple of extra $100,000 or a couple of $1,000 because you gave me the referral, and I'm a realtor and you gave me this sale. It's okay to bridge the gap and partner with other people along this journey to build your income. Partnerships are definitely necessary in order to happen. That's kind of how I got my first break. I partnered with a friend of mine that was a realtor, and we wholesaled a home together. She found the property. I found someone who was willing to buy it. I sent it over to her, and she gave me a difference, a percentage off of it. You have to get strategic with certain things when it comes to really building on top of it. So, and the ideas will come up and start to try to find different ways to really get more income coming back into your home.
That's awesome. So let's get into this next topic, which is stocks. We talked a little bit about budgeting. We talked a little bit about saving, money management, that type of thing. So let's get into the stock era, because that's something I'm trying to dip my toe in.
Yay!
Is the stocks. So,
yes, ma'am.
What is a stock?
A stock, in its simplest term, is a percentage of ownership of a company.
Okay.
Literally. So if I have stock within Lowe's, I own a portion of Lowe's.
Okay.
If I have a stock in Apple, I'm a part owner with Apple. Don't that sound good?
You got
part ownership with all these businesses.
That sounds real good.
And a lot of people don't realize that stock means ownership.
Yeah.
In a direct correlation is ownership. Like with Carnival, I'm invested with the company, with the cruise line Carnival.
Oh, wow.
These past annual seasons, as a stock shareholder, I was able to vote in who was going to be on the board because I'm a shareholder. And I don't hold a lot of percentage in that stock. But because I'm a shareholder, my vote mattered.
That's awesome.
Certain things, if they needed to do mask, no mask, we voted on those things. So a lot of these companies allow for you to get a share portion of their company to build their company even the more in their revenue. So we're pretty much helping their company sustain by investing in their company.
Wow.
And some of the companies give us perks back by dividend payments, which pretty much money back into our pocket just because we own a portion of the share. And sometimes it's annually, sometimes it's quarterly, but they give you money back just for investing in their company.
That's awesome. Okay, so what are the different types of stocks?
You have so many different. You have long-term stocks where you're really just buying in and just letting it sit there. You got short-term, which are more like options trading, where you're predicting whether a stock is going to go up or down during a particular season. And if it goes up, you hit. If it goes down, you predicted that it was going to be down, you're going to hit. So it's short-term, long-term investment strategies with stock, but those are the two main ones that you really can get into when it comes down to stock investments. And then you have dividend yielding stocks, and the main dividend yielding stocks are the ones that will produce income with you holding your shares within that company. Meaning, if I have $50 inside of Walmart, as long as I keep that $50 in Walmart and I don't take the $50 from Walmart and trade it off to Target, they're going to give me money off of it.
Okay.
It's based on longevity of how long is there is going to determine how much I get.
Oh,
so that's more long-term buying.
Okay. And another question I want to ask about stocks is, how much are stocks? What's the cost of stocks?
It varies. It varies per company. So you can honestly, we have this amazing thing now that came out recently, fractional sharing. And fractional sharing basically gives people the opportunity who may not have $1,000 or $3,000 to invest into Amazon and say, you know what, I don't have $3,000, but I have $100. So I'm not going to own a whole share, but I own like a fractional portion of a share. That gives me the opportunity to invest over time to produce one share. So if I only wanted to do $50 a month until I get to a stock, then I'm going to do $50 a month until I get to one full stock, or to however many stocks that I would desire to have or produce at that time.
Oh, that's awesome. I never knew that there was so many different types of stocks. Me looking on the outside in, I knew you can buy into it, and then later on down the line, you can get some money back. That was it. And that's why I'm glad.
Yep.
Yeah, and that's why I'm glad that I had an opportunity to get you on the show so that you can kind of give more insight and a little bit more information on how stocks work and, you know, how much it costs, how to get into it, all of that type of stuff. So I'm glad that you mentioned that because I never knew what that was. I was like, yeah, I'm gonna get her on the show.
Now I can say this. He's so silly. I can't say this. Some brokerage firms will require you to invest in so much if you end up getting with the broker to invest your stocks for you. But if you're doing it for yourself, apps like Robinhood, where they don't require you to have money down, you don't have to pay a monthly subscription or anything to use the app. You're literally just using it as a trading platform, meaning instead of me having, because back in the day you used to have a company and go through a brokerage firm in order to invest in stocks, and those are all the people you see on Wall Street yelling and screaming and hollering at the screens,
right?
Because they're needing to make sure the stock is doing what it needs to do to make sure the people that is trusting them to make those decisions on their behalf is doing what they're promising, you know. And honestly, there's no guarantee in stocks, so you can never guarantee a stock anything. So you have to be willing to lose money if you're wanting to invest in stocks, or having to be willing to risk the possibility. And that's why stocks and budgeting go perfectly hand in hand, to know how much money you're able to play around with without it hurting your pockets. Then you're going to tear yourself up when it comes to stocks, because again, it's some days you win, it's some days you may lose. The stock fluctuates daily, all day, throughout the day. It can be up real high one day, you could be winning, and you can end it being very low, and you can lose money at the end. So it's something that you have to be very attentive to and paying attention to, and being very diligent and disciplined in. Otherwise, what you're desiring to happen with it would do the exact reversal effect, because it's something that requires your attention.
Okay, I like that. So you have to be very attentive to whatever you put your money in, and I'm with you on that one. Wherever I'm sending it, I'm gonna need my eyes to follow it, because I need to know where it's going. So you mentioned that if you wanted to buy a stock in Walmart but then trade it to Target, is that possible? Like if you're able to buy a stock and then trade it to another one, can you do that?
Yeah, you can say it's just called buy and sell. That's all.
Okay.
Literally, you buy into a company. Say, for instance, if I bought into Walmart at $15, not giving figure, just throwing figure numbers out. If I buy into Walmart at $15 and say the stock did well and it went up additional $15, and now where the stock was worth $15 per one share is now worth $30 per share, I'm coming home with the extra $15. Right. You see what I'm saying? Because I started out with 15. So I can take either all of it and just completely sell it and just get my $15 back, or I can take the $15 that I made, keep $15 over here, and take the other $15, only sell that portion to get my financials back. And when I sell it, I'm now selling it at $30, not 15. So really, I didn't just come up 15, I came up $45. Does that make sense?
It does.
So if I have one stock, it's $15 and it went up $30, and now I have technically two. And I sell that one for $15 or sell that one for $30. Somebody purchase it. Now I have $30 to play with and not just 15. You see, because now I have the two portions that I'm able to take, sell it off in another company. If any company, it can be T-Mobile, it can be Sprint, anyone. If they have another company that's open, I can split it up and split it amongst multiple companies. You don't have to have stock in one particular company. You can have it across multiple companies. You can have ownership. You can have ownership across everything. So it doesn't necessarily have to be just one particular company. You can do automotive, you can do technology, you can do pharmaceuticals.
Wow.
It's a wide range, and it's so many different variants to stocks in itself and who you can invest in, real estate companies, whatever. It's a big platform for politics. I can honestly say that, but it's politics with your finances. And you'll realize how much that matters when you start to see the price of oil or the price of gas increase, because more than likely the stock market probably did pretty good that day or did pretty bad that day, and now they're plumbing. So now they're needing to make up that difference because the company didn't do so well. It went down. So the prices of gas you're going to probably see go up, because again, now I'm having to pay more out of pocket for this oil to produce the gas that you guys need every day. But when it's going great and the stock market is up, you may see those prices drop down. And the price of gas go down because again, it's doing well. So the main gist of stocks is paying attention to seasons, paying attention to what's taking place. Like right now, for instance, the holiday season is coming up. A lot of people are going to be online shopping. So you're going to see a lot of Amazon, a lot of Walmart, a lot of Best Buy, a lot of these retailers, their stock is going to go up because people are purchasing a lot of their products. So when people are purchasing from these stores, that's going to skyrocket the actual market. That's the way to look at it. That's going to skyrocket the market because the price of it is going up. They're utilizing the stuff. But when you see boycotts and people saying don't go to this store, or the business isn't doing so well, you will see the market go down because people aren't buying into their products. So that's kind of like how the overall point of view of how that market works. You need to make sure that you recognize the seasons of when it's going up and when it's going down, and you want to buy into it when it's at its lowest, not when it's at its highest. Because if you buy into a market when it's $150, you just bought a stock for $150, and what if that stock comes and now it's only worth $20? You just lost $130. You see what I'm saying? So you want to buy in at its lowest. So when it does go up, you will see that plus. You'll be in the green, basically.
So what's the best stocks to buy?
I like to start low. I like to start I look at things that I already spend my money with. Because again, the stock only does well when people are using their product. So if I'm already using Apple products, if I like Nike, if I own a Kia, if I own whatever, I want to invest into it because I'm putting my money in it already. It's more favorable for me because I know for a fact this company has money going into it. Because I'm one of the people that's using it. So I suggest to people all the time, look at what you are investing in already without the stock market and start there.
That's a good idea.
Because again, you know for a fact that that company has business. That's the main thing. As long as the company has business, as long as the company has good financials going through year in, year out, which when you get into the stock, you will be invited to the financial meetings, to the financial earnings meetings. Is Yahoo does a financial earnings meeting almost every day, just about, and you can listen into it every day with different stock markets. Because again, you investing your money, you should know how this company is doing.
I agree.
So if they're doing bad financially, that will be a great decision that will be a great time for you to say, you know what, this company isn't doing as well as I thought. Let me go ahead and pull back a little bit because their finances are out of order with this company. You have the right to do that. You are part
so
owner.
You can take your share out.
There you go. And put it with somebody else that is doing better with their financials. Because again, though we have part ownership, there are still CEOs and CFOs that are running and operating that company. And at any given moment that they're not doing right by their finances within the company, you want to make sure you pull out so you won't get caught up in that foolishness as well, because they're being irresponsible financially. And that's why I say it's very important that you listen into those earning meetings, because this is where you're getting updated. They're telling you the financial status of these companies that you're wanting to invest into, no matter what company it is. They're giving you updates on it so you can make sound and wise decisions on should you invest in the company or not. And that's one of the things I can honestly say I really liked about Robinhood, because it's very very beginner friendly app. When it comes to stocks, it teaches you about the background of the company, how many employees it has, where is it established from, where is the corporate office. It gives you the financial spread from the last 5 years, 10 years, 2 years, 3 years. So you can see the trends within the company financially, and you'll be able to predict when is this going to be a company that's going good, and which season they're doing good and which season they're not doing so good in. And you can then make a better placement and judgment of when you want to jump in and invest into that company, or when you want to withdraw back and go somewhere else, or keep a portion there so it can just sit there a little bit and move on to the next.
I like that. I'm gonna get into some stocks. I was told that getting into stocks, that it would be easier for me to go through whoever I have my 401k through, because they'll be able to give me, kind of like guide me through, give me direction on how to go by doing it. And it comes directly out of my paycheck. So that was something I thought about doing as well, as kind of talking to them, having a conversation, kind of figuring out how that works, how that goes hand in hand.
Yeah.
So I think I'm gonna do that.
Your 401k is technically mutual funds accounts that run off the stock market. Okay. To be totally honest, it is a guarantee of financial status over the course of years. That's why they tell you don't pull out of your 401k for so many years and so long, because if by doing so, it will mess up the algorithm that they set for your particular saving goals. You see what I'm saying? What they do is take your funds that you're investing in every however often you have withdrawals coming from your paycheck, and what they do is they invest them into companies that's going to make sure they bring back a certain percentage for you to have in your 401k account. I personally, if you are okay with, of course, your 401k account sitting there and you're letting another company operate it, I do not speak against it at all. You do it at the level that you're needed to do it. But if you're wanting to get a little bit more hands-on with your approach when it comes to investing, I would transfer any job. Anytime I get any job I get, first and foremost, I get opened up with a 401k. If I leave the job, I would transfer my 401k into a Roth IRA account or into an IRA account with my bank, depending on the bank. Or I actually have a credit union. So if you are able to get into a credit union, it's much better to have a credit union than a bank. And there's a reason for that, but I'll get into that later. Once you get into your Roth IRA account, transfer those funds over, because it continues to build on interest, and it pretty much do the exact same thing that it was doing within your 401k account. But now you're not at the hands of you're needing an actual particular company to do well for you to still have your 401k.
Gotcha.
Now it's more so working more so like an interest-bearing account, more so to say, as opposed to you needing a company to do well. Because you see a lot of companies that I want to say when the stock market crashed back in, I want to say I think that was like around 06, 07. It was not too far after 9/11. It was not so far after then. No, that was way before 06, 07. I was in middle school then. So maybe it's probably 02, 03 in that range somewhere. But needless to say, the stock market crashed really bad. And you've seen a lot of people who had their funds invested into a lot of different not IRAs, but 401k accounts with their jobs and businesses. A lot of them took a hit and their 401k was gone as well.
Ooh.
And they had to use the FDIC's insurance to cover and make up the difference, which eventually end up bankrupting a lot of banks, because now a lot of people are needing to file insurance claims for the money that they just lost because this stuff crashed. Everybody got a hit. The real estate market took a huge hit, and the banks lost a whole bunch of money during that time period. That means that the bank lost money, the people who was invested in that bank lost money. So a lot of people were there needing to go through that process of getting the insurance back up again to cover their financials, so they won't end up pretty much losing all of their life's worth savings.
Right.
And that's kind of sometimes the trick, or sometimes the risk you come with just having a 401k account and that's it. You want to make sure you take some of that money if you can, and find other ways to invest outside of the mercy of somebody else. That's either purchasing property, generating more income, whether you're making products or making holistic candles or whatever it is that you could probably do that could start you a business that also bring you an income, or set up something and partner with another business or something. You want to still have things set in place so you can cover yourself with your retirement, because that's majority of the time that's what people are investing into stocks for, to do a quick buck turnaround, which sometimes is not that quick buck turnaround that most people are expecting. So it takes some time, just like your 401k account. It takes some time.
It did.
You got to put time in with the company.
For sure.
Put time in with the company for you really see it. And some companies are very generous to even match you with a certain percentage, which is
and amazing. My company does that. They do that. I put a certain percentage in and they match whatever I put in. So they definitely do. It's looking promising.
There you
it's
go.
Looking promising.
You just want to, like I said. Oh yeah, that's what I said. Like I said, if you that's setting that end goal, setting that end cap, even with stocks and stuff, just knowing who you invest in and making sure you're following through with it. So the first step I would say, if you are got your 401k account, speak to a financial advisor. It's free. Technically, you're already paying for it. So even if you go to your local branch, they have financial advisors there. It's free. By you take up some of these freebies, and get some of this information, and that's where you can really begin to build that relationship and that rapport with these people, so they can see you're really ready to build on your finances, and they can help you out with your finances, especially if you go to your bank. They see everything you're spending anyway.
Okay. So, no, they really do.
Be a little bit more, you know what I'm saying? They see everything, so go through your bank and get with a financial advisor and sit down with them so they can finances. Because sometimes with us doing it, we like to lie to ourselves a lot, when it comes to finances and stocks and things of that nature. Your bank also can do stocks for you on your behalf as well. People don't realize that, but that can also be like a platform that you can use where it can go directly from your account into the stock market, and you can have somebody's watching that with you through the stock market. That is something that Navy Federal offers. Navy Federal Credit Union offers that. Most credit unions offer those type of things because, again, it's a credit union. They're wanting to build on top of that, because it's not just about money, it's about your credit as well. But that's another topic for another conversation.
That's awesome. Okay, let's switch gears. Let's get into a couple questions about investments, and then we'll wrap it up. So the first question I want to ask about investment is, should you always have money to invest with upfront before investing into anything? Is it always good to have kind of like startup money, so to speak, when investing into something?
Always. You want to know what you're investing in too. So you got to know how much you're needing to invest. I mean, it takes money to make money. Is what people don't realize. It takes money to make money, but if you don't have the money, you got to find the money to get it. So you have to. It goes back to what we started out with. You got to get that budget together so you can know what you can invest and build from there. Know what you want to invest into. Set a goal, set a plan. Investments come over time. It's strategy. So get it set. I would say, if you're wanting to invest in something you just don't know what just yet, take an extra little account out, take a little extra money out to start building a savings account for investment. A savings account don't have to just be for one thing. You got your rainy day emergency fund savings account. You have your children's college tuition. You have your own personal savings account where money that you can just do for your own personal things. You got another account just for investment purposes. You should have multiple accounts. You shouldn't just have one or two accounts. Don't put all your eggs in one basket. Get multiple accounts so you can really see where you're building with your goals financially. So you should definitely, you can't invest in anything without money. So definitely should have some money in your pocket before you consider.
I agree. Now, is it better to invest in companies or individuals?
Both.
Okay.
I say do both, because Now, the risk is bigger when you're dealing with individuals because most individuals aren't liable to laws and statutes and standards as a company would be.
Yes.
Some companies, you can, if they're doing things that's unlawful, granted, you can take a person to court as well, but obviously you have more security in an established company than you would be with an individual when it comes to you being sure that you see your residual. So if you do invest with the person, check their track record, see how they've done, see if they're taking their own word for themselves. We can't just ask people for money or dump money into people and they got a proven track record to not really do anything with the finances that they have. So use wisdom. And look at the history of things. Do the same thing with different companies. Look at their financial status. Look at where they're trying to go. As well. Don't just look at the past, but look at the future, because you want to see, would I be able to build on top of what I'm giving you, or are you just wanting to stay where you're at right now? Because then my money really wouldn't see that much movement either. It's really going to be depending upon your personal goals and what you want to do, and take your personal goals and look for those individuals and those companies that are going to be a complement to those goals. And then work with those companies and do your research and your due diligence to be sure that whatever company you're going for, whatever individual you're working with, it'd be more than likely that you'll have that likelihood of your outcome.
Okay, I got 2 more questions and then I'll be finished. My next question is, there's an app for just about everything. There's an app to help you eat right. There's an app to help you manage your grocery bills. So what are some good apps that the people can use that'll help manage money, that'll help them budget, that'll help them invest, all that good stuff, that'll help them, pick the right stocks? What's some good apps that they could use or download that'll help in that process?
Yeah, they got so many different great apps. One that I personally use a lot is Mint, Intuit. It's this company called Mint, MINT, and it's with Intuit Tax. You don't have to use Intuit Tax Services to use the budgeting program, but they break down your stuff so good. You can include even your student loans on there if you have any.
Wow.
And your login. So you'll be able to log in with your information, with your bank, your student loans, any other debts that you may owe. And they have a great tool on there that will allow you to even budget out a time frame of how long you want to how quickly you want to pay something off. And it will calculate according to all of your financials, because again, you're logged into your bank through this app, you're logged into your credit profile in this app in particular. And it's very secured and it's very trusted. It's not anything that's like rink-a-dink fly by night. But it is very secured as well. You can log into everything and it'll give you a complete financial analysis for you. So you don't have to do the legwork. It'll do the legwork for you. It has pie charts to let you see how much money you spend on food and dining, how much money you spend on actual utilities and everyday living activities, how much money you spend on shopping and personal needs, how much money you figure on repairs. It literally categorizes everything for you already. So all you literally are doing is plugging in the numbers and it automatically does the stuff for you. And I think it's such a phenomenal tool because it's right before you face your own personal analysis. And then at the very top, it tells you your net worth according to your income. And that can be depressing sometimes when you look at it.
No,
but then it can be very joyous when you see that net worth start to get up higher, because you can see your progression live time. So that's one of the apps I can really say is really good. You have another app called Acorns as well. And Acorns,
I heard about that.
Wanting to get started with savings, but also want to invest into stocks. They do a thing called penny stocks on there as well, where you can invest with pennies, not actual full dollars. So that's a really great app to use as well.
So Acorn and Mint are 2 really good ones. And then you also mentioned one, the Robinhood one.
Yeah, that's for that's primarily for stocks.
Gotcha.
Stock investing. Now I can say this, Robinhood does also have an interest bearing account. Whereas if you're wanting to just budget and save, you're still in your process of really researching companies and things of that nature, they literally have an actual savings account that you can put your money into, and it builds on interest over time as well.
Okay.
So you keep your money in that account, you can move it over when you're getting ready to do your investments with your stock.
Okay.
Outside of that too, you have American Express personal savings account.
Okay.
That is only an online account. I recommend everybody to get it because that's an online account and you don't have a debit card to it. You have to transfer the funds to your main primary checking.
And what's the name of that one?
It's American Express. It's their personal savings account. It doesn't go off your credit. You don't have to have a minimum to actually start the account up at all. You can literally put $5 or $1 in there. And that's also another great interest bearing account. I always say get a savings account within your bank, of course, but get one that's also outside of your bank.
Okay.
One that you can't have immediate access to if you wanted to.
That's what I need. Because I'm always tapping into it.
Would get you in trouble.
Woo!
That immediate access will get you in trouble.
Yeah,
girl,
it will.
get you in trouble. So you want to get something that's outside of your bank as well. That's also secured, and something that's going to take a few days for you to get it if you needed to get it. Because again, you're not going to want to have to wait every single time to get your money. So it'd be less likely for you getting it.
Right. So, very true. And my last question would be, is it necessary for a financial advisor?
I wouldn't say it's necessary if you're disciplined. If you know you want discipline and you know you just been struggling on your own, get one. I recommend everyone to get one, especially those of you that have families like me. I have a family of 5, so my everyday stuff. It's absolutely no way I will be able to keep a track of everything that I do by myself. Though I still check in and I do them on a weekly basis, I just can't dedicate day-to-day time. So I have someone who is specifically there to look at my finances and make sure that we're meeting budgets on stuff that we need to have done, so that I can have an extra eyes on it, because they even maybe have better strategy or a better strategy for me to build faster that I didn't even recognize. So financial advisors are always amazing. Plus they have unlimited tapped resources for you, where you can actually go into those resources because you have a financial advisor. They're free through your bank. So get one. If you don't get one anywhere else, definitely get one with your financial institution, because it's free. You don't have to pay extra money for that. That's those people that sitting at those desks when you walk into the bank. Those are financial advisors. You can talk to them for free. So schedule a meet and talk to them and let them know what your goals are, and they help you set them.
Okay, cool. So listen, before I let you go, it's a little game I want to play with you. Okay. It's called This or That. So it's a series of, I wouldn't say questions, but kind of like a series of words, and you'll choose which one you prefer. Okay?
Okay.
So let's get started. The first one is, would you prefer heels or flats?
Heels.
Okay. Second one is natural or relaxer?
Natural, baby.
Okay. Listen, I didn't just got into it. Period. Okay. And the third one is weave or braids?
Ooh.
I know. It just depends on how you feel. I know.
That's a good one.
It depends on the mood you in.
Yeah. Well, I can say, but to be totally honest, I would say braids because it's less maintenance.
Okay. Yep. Go ahead, spray it and go about your business. You ain't got to do a whole lot. Okay. Comedy movies or romance movies?
Comedy.
Ooh, I love me some good comedy.
I love laugh. Don't get me wrong. I like a nice romance, but they kind of predictable.
They are. They're starting to be like that.
Ones, yeah, but I like those comedy movies. I love laughing.
Me too. I love me some good comedy. Okay, a staycation or a vacation?
Ooh. Vacation.
A vacation? Cool.
I gotta get a vacation.
Get tired of seeing the everyday stuff. You know, want to see something different. I get it. Okay, dresses or pants?
Dresses.
Okay. Lipstick or lip gloss?
Ooh. I do both.
I mean, both of them be popping though.
I mean, we try. I say lipstick.
Okay, lipstick. You got a specific color you like to wear?
You know what? I've really been in this plum nude type of vibe lately.
Okay.
Not a lot, but it's been like that little ombre type of look.
Yeah.
I love it.
And it's very fallish.
Yes.
Very fallish.
Yes.
I like that.
Yes.
Very fallish. Okay. A full face or a natural bead?
A natural bead.
Ooh, yes.
Yes, ma'am.
A sundress or maxi dress?
I'm a maxi girl.
Oh my God.
I'm short as ever, but I love max. I love a good maxi. It's so pretty.
They are so cute. They come in different varieties too. I like that.
Yeah, they do.
Okay, this last one, pantyhose or bare leg?
I know my mama gonna kill me for this because we church kids. You put the pantyhose on, girl, but I hate them doggone pantyhose.
I don't like pantyhose either. Oh my, especially in the summertime.
Yeah.
I can't wait till church is over so I can go in the bathroom and take the mugs off.
Do you hear me? If I ain't already got a ruin in them.
Okay.
You got to do with the ruin and the
girl.
Listen. I got nails now. They're going to tear when I put these things on.
Exactly. So now I got to worry about having an extra pair because when I put them on, I have to take them right back on off. Yeah, no.
That part. I have to do some tights if I do anything.
That was all I had for you today. Thank you so much for taking time out of your day, making room for me in your schedule to come hang with me on the lounge. I have definitely learned a lot about managing money more, budgeting, saving, stocks, all that good stuff. I'm gonna definitely check out some of these apps that you mentioned because you're not the first person I heard to mention some of those. So I'm gonna check those out and see how I can fit those in my money management.
Yes, ma'am. Sure. Do it. You will love it. You will love it.
I'm definitely gonna do that. Is there anything else you want to say to the people?
Well, thank you so much for having me. I feel it's such an honor to have come and been invited and
yes, ma'am.
And to speak about some things. I tell everyone I am not a tip-top expert at this. I'm just a mother that wanted different for her 3 kiddos. So I'm doing this as I go, but I'm learning as I go, and we should never stop learning. Anything that you're not producing and progressing from is dead. So you should always want growth with anything. So thank you for growing with me today. And everyone else. And anything that I know, anybody that want to reach out to me, you surely can. My name is Shandalyn Jackson on Facebook. I'm Just Lady J on Insta. And hit me up. You have any questions, anything that I don't know, I will find out for you and give it to you. That's who I am.
I know that's right. One thing I also want to mention before I let you go is I appreciate you for wanting to give the information out. Because a lot of us, we hold on to information that we know will help grow the community or help, push the culture, and we keep it to ourselves. So I'm so glad that you were unselfish about wanting to give this information out and wanting everybody to win. So I appreciate that because you, like yourself, there's a lot of other moms, that have children that are just trying to do their best, but they want to expand their finances. So I thank you so much for giving us the information that we needed so that we can progress this money and be out here living our best lives.
That part, live it.
Facts. Okay. Well, listen, y'all already know what to do. If you are not, follow us on Facebook.com at the Queen's Lounge Podcast. You can also find us on Instagram at the Queen's Lounge Podcast. If you are not, you need to be following us wherever you listen to your podcast. We're on Pandora, we're on Spotify, we're on Castbox, we're on Apple Podcasts, we're on all that. So if you are there to listen to a podcast, you are there to listen to the Queen's Lounge. Thank you so much for tuning in, and we're gonna catch you on the next one. Thank you so much, cousin. I appreciate you.
You're welcome. Love
yes, ma'am. Enjoy the rest of your day, and I'll catch you on the next one.
Yes, ma'am. See you later.
Alrighty, see ya.